SoFi is the Tesla of the fintech industry. Before you all grab your pitchforks and comment, "They're not even in the same industry. Tesla is focused on renewable energy and SoFi is in finance," hear us out. We know about the obvious differences between the two, but in this video, we'll talk about their similarities, a lot of which have to do with their insane vertical integration technology stack and the infinite potential that these two companies have. We haven't heard anybody talk about this before, so be sure to stick around until the very end of the video because we have a special bonus clip. Hello and welcome to Wealth Gambit. We've made over 100 videos covering SoFi since May of last year, back when it was still IPOE. So if you want to learn more about SoFi, be sure to check out our SoFi playlist, link in the description, after this video, of course. Shout out to all of you who commented, "Still buying SoFi," in our SoFi stock The Path to Victory video. We greatly appreciate you watching and commenting on our videos. By the way, we're not financial advisors and none of this is financial advice, so always do your own due diligence. Anyways, let's get straight into it. Point number 1. They both have disrupted the traditional way of doing things. When Tesla first started out, there was no such thing as a cool electric car. To take it a step further, a lot of people even made fun of electric vehicles. Fast forward to the present, and every automobile manufacturer and their moms are trying their absolute hardest to come out with a compelling electric vehicle. Now let's take a look at SoFi. When they first came out with their one-stop shop mobile-first financial application, no one else had even come close to doing that. If you've seen our recent video covering Bank of America versus SoFi, you would now know that Bank of America, aka B of A, a legacy bank, recently announced that they too would be coming out with an all-in-one app. Let's be real, SoFi is the one that made all-in-one apps cool, just like Tesla's the one that made EVs cool. Honestly, we also wouldn't be surprised if the other legacy banks started adopting a similar strategy, or if one straight up just tried to acquire SoFi. Now, on to point number 2, market share and EV credits. Most major fintechs have to go through Galileo, which is owned by SoFi, and most car companies have to use Tesla's EV credit. Did you know that the global market share of electric vehicles has more than doubled in 2021? The International Energy Agency recently released a report that shows that the EV market share jumped from 4.11% in 2020 to 8.57% in 2021. And according to Statista, Tesla sold about 936,200 units in 2021, making it the best-selling electric vehicle manufacturer worldwide. Today, gas prices are continuously surging, which is causing more and more people to greatly consider switching to EVs as a way to save money. But what about the fintech market? According to AlliedMarketResearch.com, the global fintech market was valued at $110.57 billion in 2020 and is expected to grow at a compound annual growth rate, aka CAGR, of 20.3% from 2021 to 2030. What a time to be alive, am I right? In a study conducted by researchandmarkets.com, it showed some of the major players in the global fintech market. Do you see what we see? Social finance. Let's go! People switch to EVs as a way to save themselves from spending too much money on gas, and they are also switching to fintech companies for their financial needs to free themselves from paying overdraft fees and high interest rates and other hidden fees. Not to mention the horrible interest rates legacy banks provide on your cash in your checking account versus something like a SoFi. Tesla and SoFi have the same thing in common. They help people save money. Point number 3. Vertical integration. So apart from the fact that Tesla and SoFi are well loved in the short seller community, let's talk about how Tesla used vertical integration to get to where it is today and how SoFi is quickly doing the same thing. The past few years have been tough for the auto sector, and manufacturers blame it all on the supply shortage of semiconductors. Daddy Musk's, Elon's company isn't exempt from the negative effects of the illness, but what the difference is while the other auto companies took a dive in the unexpected crisis, Tesla was out there still killing the game. Tesla ran at full capacity and achieved a solid quarter, then another, until they recorded yearly sales double that of 2020, even in the middle of a crisis. On the other end, however, General Motors and Ford Motors closed some of their factories just because of the global shortage of computer chips. Comment SoFi is king of finance down below to get a shout out on our up and coming videos. But back to how this is similar to SoFi. Tesla didn't outsource their software. Instead, they rewrote their own, which played a large part in helping them overcome this chip shortage. Let's hear from the techno king of Tesla himself.
The chip supply is fundamentally the governing factor on our output. It is difficult for us to say how long this will last because we don't have. This is out of our control essentially. It does seem like it's getting better, but it's hard to predict. In fact, even achieving the output that we did achieve was only due to an immense effort from people within Tesla. We were able to substitute alternative chips and then write the firmware in a matter of weeks. It's not just a matter of swapping out a chip. You also have to rewrite the software. So it was an incredibly intense effort of finding new chips, writing new firmware, integrating with the vehicle, and testing in order to maintain production. And I'd also like to thank our suppliers who work with us. And there've been many calls, midnight, 1 a.m., just with suppliers in resolving a lot of the shortages. So
it's easier and cheaper in the short term to just outsource things, but this comes with one fundamental problem. It ends up costing you in the long term. And because it's outsourced, a lot of times your competitors may have access to the same resources and systems, which ends up making your products and services very similar to that of your competitor, which leads to a less durable long-term competitive advantage. Now, why we here at Wealth Gambit love vertical integration, or when a company takes direct control of a stage of its production/process, is because vertical integration is a key in long-term compounding growth. Vertical integration happens when companies buy their own suppliers, manufacturers, or basically bring anything in their process in-house. Recently, SoFi acquired Technisys, a company that would complement its technology segment, Galileo Technologies, and Pagaya is also in there. All of them make the one-stop shop dream come true, especially after getting the bank charter approval. Even if Tesla and SoFi are in different markets, the two seem to be paving the way in their respective industries, and that is disrupting the industry they are in big time. Although vertical integration definitely is expensive, if things go the same way for SoFi that they did for Tesla, then vertical integration seems to be the right move to ensure a long-term, durable competitive advantage that will ensure decades of compounding growth in the future. And let's hear from the Techno King and Commander Noto.
Tesla is certainly a company that tries very hard to do the right thing in all respects. We try very hard to do the right thing in all respects. We don't always succeed. But if you're looking for a company where you say, is that company really trying to do the right thing? That is Tesla. Okay, we really try. Okay, I mean, anyway. So as I was mentioning, we've got the 3 parts of sustainable energy future: solar and wind. But I think primarily solar will be the main source of energy, of sustainable energy, and energy in general. And then you need to store that energy with stationary battery packs, and then you need electric vehicles and electric airplanes and boats and whatnot. So yeah, great.
Yeah, the great thing about our business is that we are a one-stop shop for financial services products, and that's allowed us to drive really phenomenal results throughout 2021, which has been a changing rate environment with the benchmark rates, and hitting record revenue in the quarter and significantly exceeding our growth in members is a reflection of having a broad array of products, great marketing. So let me talk through the products and how interest rates affect them. We have a checking savings and loans, checking and savings product. SoFi just launched on the back of our bank. We provide 1% interest on that. That's going to be a very competitive rate compared to others on their checking accounts. It's about 33 times higher, and we give you no minimum balance, no restrictions on your spending, free overdraft protection, and 2-day early paycheck. So that is going to be very differentiated in a rising rate environment where people need to get a better yield on their money because borrowing money is more expensive. We have 4 different types of loans. Our student loan refinancing product benefits as people refinance into lower rate loans, and they still have a window to do that. But if rates rise, that will go away. Our personal loans product, on the other hand, is a product that people refinance out of credit card debt, that's variable rate debt, that is going to go up as rates go up, into a term fixed rate debt loan called personal loans. And so that benefits as well. And then on the investing front, we have a wide range of products you can buy on our brokerage account as well as cryptocurrency. So we have single stocks, we have ETFs, we have robo accounts, and we have cryptocurrency. And so depending on your view on interest rates and the type of yield and return you want to drive, you can allocate across that portfolio of different products. We also do have a credit card, which is a very attractive credit card because we give you 1% back, but we also allow you to double your rewards if you redeem into paying down a loan, which you'll want to do with higher rates. You can redeem into checking and savings, and you can also redeem into investing. And we double the points when you do that. So people are going to be looking for ways to save and better ways to invest. And we have many products that will suit them well when rates are higher.
That's it for today's video, guys. If you haven't already, make sure to join our Facebook group called SoFi Investors. Link will be in the description. Also, sometime near the end of next month, we will be launching a Patreon. So let us know in the comments if you would be interested, and if so, what you would like to see in the Patreon. Currently, we already have a Discord in line, and we will be revealing our entire stock market portfolio, numbers and all. Not to mention, we will develop a system to message news in real time, or at least as close to real time as we can get. But anyways, until next time, peace.